Okay, this is Brian Stoll for Timing Strategies. Monday, March 31st, 2008. End of the quarter here. Thought we'd see a little different, a little more volatile price action than we did. So, but that doesn't mean it can't happen tomorrow. Looking for a little more volatility coming in Tuesday, Wednesday. And then if this market's going to make a turn, it's going to have to do it pretty quick, either starting here today, and it's kind of a muted turn, not a very volatile, but more of a muted, low volatility squelch sort of turn, or we're going to get one last, stab lower. We've got a series of 1, 2, 3, almost 4 days of lower lows. What I'm looking for, ideally, if I'm going to get long any further than I am, and if you read our letter, we sent out a position update on an article archive. You can read that. What we were long from here on March the 7th, 50%. Held that, got cut that position down by half, so we're only long 25% on this day, March the 25th or the 26th exactly. I'm not that certain. And then what we're looking for is to get long somewhere in this area, right where we're at right now, at 131.75 on the spiders to about 13.17 on the S&P cash. I was looking for a little deeper sell-off today, which we might still see tomorrow. Something that could take us down to as deep as this B1 level, which is right at about 128.75 to 129. So right in this level, right around B1, in this zone right here. I put a couple of markings up here, 50% question mark, 50% question mark. That's part of the chart update that we used for the article that we sent out for clients. So again, I'm looking to, re-implement that 50% long position. Not, certainly that's not written in stone. We'll see what happens, but it's all based on price action, our systems, and what that tells us. So what I want to bring to attention real quick is some of the other sectors I get a lot of questions about, like the XLF. Actually looking to get long the XLF. Now, that long may very well come in starting tomorrow. If we can wipe out today's low on the XLF, trade below that low, and then there's no specific price that we're looking at, but then see a move back above, then we will more than likely start getting long the XLF. I'm not the only one looking for this type of price action, but really it comes into a test of this low on the left that we got here back on January. Yes, we're above it, barely. I'd like to see it crush that low, take it out, wipe out as many stops as possible, and then on a real volatile move, trade back above that low of $24. And at that point, I'll be a little more convinced. I think that we're seeing right now is sector rotation from the oils, that not necessarily topping out, but give you a real quick look-see here, and if I can draw it from this point, you'll see, it's just garbage. You're not going to get it that way. And anybody can draw a trend line after the fact, but if you look, that's kind of the trend line that we've got going on right now that we're testing on the oils. So the XLE, I think there's going to be a little bit of rotation somewhere back out of the oils temporarily and out of the ags and the stuffs, back down at least to that regression point right down there, to as deep as the low end of the channel. But long term, the trade in ags, metals, materials, oils, things of that nature, miners, much stronger fundamentally than all the garbage that's Wall Street puts out, that's trying to get your confidence and trust back with all this bailout. So that'll get your trust back real quick, won't it? The other point, a couple areas I want to look at is anybody who trades the ags, and I invest, on commodities also, but this is a commodity ETF, the DBA. We're actually short using some put options in this stuff. This is kind of a conglomerate for the ags as far as soybeans, wheat, and so forth, the stuff you got to grow. We're short that with some put options, albeit not, a fantastic amount. But I anticipate that we're going to see a little more of a sell-off into the ags. It should take out this low that we put in, which was a big sell-off that we had on some beans and such back in January. That we should take out that January 23rd low on the ags on this DBA. And if we take out that low again We take it out somewhere. We're looking for it to basically, if you want to go a little deeper than that, well, let's do a little more time back here. I mean, this trend is established, well, for as long as it's in. This trend is established on the ags all the way back to August of last year. How far down is it going to go? I mean, there's going to be a time to buy this DBA, no question about it. Is it going to go as deep as about the $30 price tag? Well, right now I hope so, because I'm short. So that would be real neat. But that's not a strategy, I hope. You know, we could go all the way back down to this top, or to this top down to about 28. Anywhere below this $34 price tag, I'm going to make this a little thicker. Anywhere below that $34 price tag, back down into this range, and then see what kind of price action we get from there. Think about buying it, buying the ags, buying the soybeans, buying the DBAs, buying the Monsantos. And we're also short Monsanto, but we'll see what happens there. Last point I want to bring up is the GDX. Oh, let me go to the IYR, because, excuse me, the TLT, because we are short bonds, and we're kind of sweating a little heat right now. The TLT, we're short bonds using some puts, and we're also long in the Ridex inverse funds, or negative 1.25 beta. I'm looking for that TLT. If you want to use that as a proxy, it's not a very good one. We use the TYX for the interest rates. I'm looking for that to take us down somewhere, at least into this range. You know, back down into the lows on 91, 92, 91.5, 92. And for bonds to basically range for a while. With that, if we do get a sell down in the bonds, it takes us back down into the low end of this range. That should put a little upward pressure on your dollar. I mean, your dollar's just being destroyed, along with their fabulous strong dollar policy. My God, how you know, you really got to amaze at a government that has these communication policies that are just so blatantly deceptive and wrong and false and fraudulent, that they've got a strong dollar policy. And you know, your dollar, I hate to do this, depress me even because I got cash. Pound F, whoops, space pound F. You know, here's your dollar, 72 cents, 72 stinking little cents. From where it came back from, let me go back a little deeper in time. You know, back from when, you know, the current man in the White House, and all politics aside, this is economics, you know, $1.20 down to 72 cents. I mean, that's just pathetic and disgusting, and I'm, you know, it's theft. It's blatant theft and robbery. To get back to where you'd need to be, just to get back to, you know, a dollar value on your portfolios, even if you're sitting in CDs or stocks, you got to do 68%, almost 70%. You know, so now, yeah, you think you've lost only, you know, about 35-40% of your money. Well, let's say at 40%. 40% of your dollar, but to get back to break even, or where you were just, you know, back in 01, 02, you got to do 70%. That's just shameful. I mean, I'm sorry to make this, you know, a platform for anything other than economics, you know, and making money, but you know, I'm just disgusted and appalled. And how to try to manage that a little better is what we're here to do, and how to manage that long term. You know, sell the dollars. Short term, I believe that we're going to see a little bit of a rally in dollars, just basically because the bonds, TLT, we should see a drop or a sell-off in bonds. That should put a little upward pressure on dollar. That should put a little more downward pressure on. I get a lot of questions on this one on the GLD. I'm looking for the GLD to trade back down somewhere in this top area, somewhere just below just somewhere around the breakout of about, say, 83.5. Somewhere in this range. I got some numbers. I don't want to go into them. If you want them, I'll give you a call. But they're for clients mostly. But somewhere in this range, and we'll see what price action does. Keep your eye on silver, too. This is a beautiful little ETF, the SLV. Oh, I gave away some of those numbers. You watch the SLV. If the SLV can get down to about $1.40, this is not all the price data, but this is the price of silver. If we can get the SLV back down to about $1.40, man, oh man, that's going to present so many opportunities, and not just the silver market or the gold market or the, you know, commodities market, but it's a gift. And give me a call if you have any questions on what I mean by that, but that's kind of what we're looking for. Beyond that, strictly back to the S&P and the Ridex approach. We'll see what happens here if we're going to add to that. The XLF could be the the wild card here, because if we can get a sell-off here in the S&P, back down to about 128 half, 129 on the spiders, or about 1280 on the cash, 1295 on the S&P cash, we may think about adding in that 50% again. What's going to be the big tell is going to be that XLF, and that XLF we're watching on a daily basis. So if you have any questions, please give us a call, check out our website, or send us an email. Wish you all the best, and we'll update this. Hopefully YouTube will cooperate, and we'll get this posted tonight. All right, good night.